Grant, what is your take on all of this?
Yeah, I mean, it's a good one to start with, Paul, because I mean, this highlights the year that TD's had. I mean, the last couple of years, and really, this is no surprise, given that we've been feeling negatively about TD this whole time. I know a lot of people have been looking at this as perhaps a value opportunity, and I think this earnings report and the language that's being used is exactly why we stayed away from this company as an investment option over the last year, and maybe even the last year and a half, if I were to go back. What this is highlighting is the uncertainty around this company right now. And I think it also highlights just how much TD needs to work on getting morale back. I think they need to earn trust back. And I think that, when you go through issues like they've gone through, and this harkens back to like Wells Fargo a lot for me, and the same kind of a story where you get these systemic issues that go from one level, and it seems like a very baseline level, but then it goes right up through the top. And so you have to kind of wonder where those things end up. And so this news, this language they're using, it just goes to show me exactly that they're going through this process and they're going to try to earn this back, but it's going to be a process and it's going to be a while. And so this is one that I would steer clear of for a while as an investor, because we just don't know how far it goes. We don't know how long it's going to take. And there's a lot of work to do there.
Do you want to take a crack at how the market will respond today to this news from TD? I can tell you and viewers that the stock is down a couple of percent in pre-market trading in New York, but the U.S. pre-market can be there it is now, down 3.5%, or 3 2/3%. The U.S. pre-market can be a misleading guide for Canadian listed stocks as to what actually happens in the Canadian market. But there you have it, the stock down more than 3.5% in New York. So what do you think happens today? And more to the point, when the bank says it may not be able to grow profit this year, what does that do to the mid or long term view on the stock?
Yeah, I mean, I expect obviously the shares price is going to react negatively today. I mean, I don't think this is going to be a catastrophic event, and I want to be clear on that. I mean, the bank is going to be fine in the end, but I do want to see more clear direction. I want to see new leadership take over, and I want to see what they're going to do. And so in the short term, I expect this to be a bumpy ride for TD. But at some point, this does become a value opportunity. I mean, at some point, this bank turns it around. Now, do I see that happening in the next 3 to 6 months? Probably not, but sometime towards the end of 2025, I start to think that TD is going to be back on the rise again. And to be clear, that doesn't mean that the share price can't appreciate before that. But for me and for our investors, what I want to look for is a more clear direction. I want to see these problems resolved, because as of right now, it's so uncertain where this where the fallout is. It's so uncertain how they're going to correct all these things. And from a profitability standpoint, that's exactly why they're not showing guidance. I mean, they don't know, and they don't want to report to what's going to look bad out there. And so I think that I think that we're going to have to see more, but it's probably not coming in the next 6 months. I think it's probably towards the end of 2025 before TD gets a little bit more interesting for us again.
Okay, let's pivot to Bank of Montreal. As you know, and as many of our viewers know, the bank has an issue with loan losses in the United States. Its commercial lending portfolio in the U.S. that was flagged very prominently by a Bay Street bank analyst earlier this year, who said the bank is clearly losing more money in that loan portfolio than other banks who are lending to the same relative population of borrowers. And these are small and medium businesses, large and medium-sized businesses in the Midwestern United States, in very general terms. Once again, BMO has missed expectations, and this is the reason. And we're looking at it now on the screen. It's a very wide earnings miss, $1.90 in earnings per share, $2.39 was expected. And the bank acknowledges our overall results were impacted by elevated provisions for credit losses. What is your take on this story?
Yeah, so this is a bit of a tougher one for me, because there's a lot that I like about BMO and their business, and I like a certain direction that they're going in. And I actually think that there is a shorter there's a shorter term opportunity perhaps here. I say that with caution because, these loan loss provisions are concerning. And obviously, especially with what we've seen in this report, that is concerning. It's a little bit higher than what I would have liked. Well, it's than I expected for sure, and what most expected. And so, I would say it's concerning. But at the same time, I do think that there might be an opportunity coming much faster than that TD opportunity with BMO. And so I am looking at this as a potential value opportunity. We're not buying it today. We're not adding into it, but we're not selling off of BMO either. We've got a hold rating on it right now because I want to see how this plays out. And I am ready to go into BMO because I think once some of those loan losses start to clear up a little bit, we could see a bit of a windfall with BMO, and that could add some quick turnaround on the share price. So, this is not a good report. We're not happy about it. It doesn't look good, but I do think that there is a turnaround point that's potentially coming early-ish in 2025, and so we're looking for that. And I do think that there's a buy-in opportunity coming with BMO.
Okay, if investors want a clean earnings beat, it looks like CIBC is the bank that has delivered that.
Yeah.
It has reported 24% growth in adjusted profit in the fourth quarter. Adjusted profit reaches $1.9 billion. There's the earnings per share number, $1.91 as opposed to $1.79 expected. And this is the flip side of the BMO story in large measure. One big push the bank's earnings got in the fourth quarter was a lower than expected provisions for credit losses number. That number was $419 million in the fourth quarter. It was down 23% from the same quarter a year earlier. I don't have the quarter to quarter variance, but we'll remind viewers that every dollar in a provision for credit loss is a dollar that comes off profit. So when your provisions are smaller than expected, your profit will tend to be larger than expected, and that's part of what's going on at CIBC today.
Yeah.
Grant?
Yeah, so you're exactly right, Paul. This is a flip side situation here. And this is actually a little bit more of what we expected from some of the banks, especially as interest rates are coming back. But I think this goes to highlight, at this point, we're seeing a big divergence between the Canadian banks. And, a lot of investors out there will just buy they'll buy a basket of Canadian banks and they'll just hold on to that and think that everything's going to be fine. And I think this is a time where you want to get away from that strategy. I mean, CIBC is case in point today, where we've got a really great report here. Loan loss provisions have come down, which is, again, more in line with what our expectations have been, is that as interest rates are coming down, loan loss provisions are going to improve for the bank, and that is going to add to profitability, especially in the short term. And so CIBC is the poster child for that today. But this really just goes to highlight that I don't think you want to be buying just a basket of Canadian banks right now. I mean, I would much rather be owning and targeting and allocating funds away from a TD right now towards a CIBC, towards a Royal that had a great report as well, and Bank of Nova Scotia as well. I'd be going more heavy into those types of banks and leaning away from the banks that I think are still struggling, and that's case in point with TD. But yeah, great report from CIBC. This is optimistic, and again, more in line with what our expectations were as interest rates continue to come back. And I think we'll see more of that from other banks as we go along here, especially as we get into 2025 and as things continue to improve economically. But we got a long way to go still. And one thing I would add in is that I'm more favorable where the U.S. economy is going at this point. And so, if you're looking at better opportunities, the banks that are, more heavily invested into the U.S. and more able to take advantage of U.S. economic growth over the next 24 months in particular, I think are going to do quite well. And so that's an area that we're targeting right now within the Canadian banks.